Good afternoon, everybody. It's another week of video reports, and I just wanted to show you the website that I have. Just show you a little bit of information. Well, obviously, this is the home page. If you click about it, you can see a little bit about myself, my experience in the business. And if you click why charts, well, obviously it's kind of self-explanatory. Why charts, why technical analysis, and in case you haven't figured it out, I'm a contrarian. And if you go here, you get a little bit more information. You can contact me, you can email me, and let's go back to the home page. On the home page, it gives you a little bit of information on some charts. If you want examples, you can see some examples there. And over here on the research, you can click on some of the free sites that are in the internet. Obviously, if there are some good free sites out there. Some of the better ones you do have to pay for it though, but a lot of these that I have right here, you can just use them. They're free and they're absolutely amazing to help you get your picks. So if you click on that, it'll take you to my blog, and you'll see a little bit of you'll see the blog website. I love the charts, the background chart, and actually just looking at this article, the future transportation in China, I think this is cool. And it's actually a kind of like a bus train type thing where the cars can go underneath where the people would be up there, and I think it's very nice. It's very nice. In case you didn't know, Warren Buffett seems like it's going to have a successor soon. But anyway, what I wanted to speak upon was that this is a chart that I posted a while back. This was last year in '09 March, and I had showed that it was an inverse head and shoulders pattern, and obviously there were a lot of signs there. Positive divergence on the RSI, the MACD, the money flow was really nice. The volume was very heavy here, showing that, I mean, we were looking at turnaround and capitulation, and as you saw, the volume really dried up. Even though it was going up, it dried up. So that doesn't mean that just because a market's going up and it's on light volume doesn't mean it can't go higher. Obviously, I noticed this a long time ago. This is July 23rd in 2009, and I circled 11,000. Coincidentally, I think not, that we reached slightly above that level. So it was a really nice observation. And recently I also showed that the Nasdaq is forming a same typical formation, and it's a nice little pattern that we have here. I should have showed the Dow. I don't know why I did that. I should change it. I believe I have the Dow as well, and coincidentally it's right around the same time frame. And lo and behold, if we look at the daily charts, I'm going to close this out. If we look at the daily charts and we see the Dow right here, a while ago, right around the same time frame, we formed the inverse head and shoulders pattern. We broke out of it. I've been bullish for about a month now, maybe a little bit more, and we've done very well. The volume again is getting louder as it's going higher. Here are the resistance levels. This is the new support level, and we also see the current trend. This is the trend right here, and we are forming something called the rising wedge. Now I drew it out right here. That's a very bearish sign. All right, but it's too early yet. Give me a second, please. I'm sorry about that. And as we can see, we have a rising wedge over here, and it's being formed, and that is a slightly bearish pattern. The money flow, as we can see here, is not as high as it was previously, but even though it's been trading sideways, we can see that it's been going higher. The MACD histogram is going lower, and the RSI looks like it's losing a little bit of strength. However, I'm not a bearish yet. Again, I'm not bearish yet, and I think that looks pretty decent. Let's look at the Dow on the long-term chart, longer term, I should say. Here is looks like it's forming a bullish crossover on the MACD. The RSI maintain its strength, and it looks like the moving averages are about to cross over again. That's a good sign. Again, volume has been light, and if we look at it here, the money flow, nothing great, but it could be a lot worse. So the Dow does look like it's showing forms of life. and it's definitely looked like it's breaking out. So I mean, we have a little resistance here, so it might take a little bit of a breather. But lo and behold, you can actually see the wedge right here. If you draw it here, well, then again, I've been doing this for a long time, so I can see these things just by looking at them. Here's the gold. The gold, I mentioned that it was looking weak. It's pulled back. I said it would pull back to about 110. I was off by $3, and it's forming an island reversal. It was accompanied by heavy volume as well. Nice little heavy volume. So that's a good sign for that right here. That's a nice little sign for the island reversal. So that's definitely a nice little sign. Let's get rid of that right here. That's a nice little sign. So it looks like gold might start running higher. Remember, the indicators are just an idea to give you the strength of the move or the trend and to help anticipate a move. But you always have to look at the trend, and you always have to look at the patterns. And this is a nice little formula here. So it looks like gold might pull up to about the 120 area, and we'll take it from there. Once it hits there, we'll take it from there. Here's the NASDAQ. Oh, I didn't even bother with the NASDAQ. The NASDAQ has been lagging the Dow, as I mentioned that a while ago, but it's starting to look somewhat similar again. It still hasn't broken this little area here, and it's chugging along, but the one difference is that the NASDAQ opened lower on Friday, and it rallied up. And as you see, the volume started kicking in on Friday. That's a very good sign. Oops, I put the NASDAQ twice. Alright, so we're going to take it a little bit differently this week. I just wanted to show what the month of July did, and I mentioned before previously various times I thought that July would not be a negative month. At worst, it would be a so-so month, and it actually turned out to be a very nice month. As you can see, the NASDAQ, the Russell, the Dow, the S&P, and even the American exchange have done very well. And the best performer for the month of July was oil. The worst performer was the US dollar, and gold and silver actually didn't do that well. Now, what I want to show as well is, just real quickly, we can see that the market really turned around right around July, early July. Let's look at the international. As you can see, May, right before June, Australia started to turn around. Austria turned around right around the same time. Belgium actually didn't do so bad, just that one little drop. And remember, this flash crash that happened was supposedly a US thing, but it happened everywhere, as you can see. The one thing that I want everybody to learn, the markets don't operate how you may think they do. I'll get into that some other time. I'm not going to get into that now. As you can see here, Canada didn't do so poorly. As you can see here, France, triple bottom. Nice little triple bottom, and started bottoming out right around May. Germany right around the same time as us. Hong Kong slightly before we did. Italy right before we did. So, well, then again, I mean, Italy right after us, actually. Japan, same time as us. Malaysia actually didn't do so bad, the iShares. They bottomed out right before June. Mexico right before June. The Netherlands, nice little triple bottom. They were actually up in July. Sweden actually didn't do that bad. They bottomed up. So a lot of these overseas countries, they actually started bottoming out right before we did. And I'm not going to get into much information there, but it seems like it's a worldwide thing, and a few countries actually bottomed out before we did. Now, I use stockcharts.com. Excellent trading tool. You can get the charts there. You can customize them. I like to customize it a certain way. So that's it. That's the report for AO Finance. I'm not going to make any wild calls. Gold does look like it has the potential to really start turning around. The Dow looks pretty decent. The volume is light, but chances are we're going to have an okay time this August. We might have a few bruises and bumps, but overall it seems that the market is so healthy. It's not as bad as it was a few months ago. And if you recall, I started turning bullish, and there's still a lot of people that are bullish. But again, the market does not work how most people think. Hope you guys have an excellent trading week, and I guess I'll see you guys next week. Take care. Bye-bye.